in the hot seat from returning from China. I landed 2 hours ago, so raring to go. You know, in some ways, we'll talk about China as we go through this week. Actually, in some ways, gutted to have kind of missed what a remarkable week it was last week, but we certainly caught the action, and very interesting to get the kind of China, or just more broadly Asia, spin on it. But we'll talk about these things as we go through the week, but let's just kind of get on track for today and the week ahead. You know, you're certainly getting, I mean, the main theme, I've got two charts here. We'll talk about equities later, but for me, well, the chart on the right really is the big story here. That's bonds generally. I'm representing that asset class by 10-year T-notes here, and yields have climbed very sharply. Of course, here's the price though, and we're looking at more lows, more downside, extension of last week's big move lower, and as you can see, technically, you know, and probably inevitably, we are heading for this December 2015 low, 125.14 on the continuation chart. This is, of course, new lows for 2016 here, and there's really nothing in the way, it has to be said. Yields are rising, and you know, this is a function, really the main kind of takeaway from Trump. Well, it's hard to say what the main takeaway is. I think there's a lot of uncertainties and there's a lot of contradiction in his policy outlook, and then of course there's implementation risk, so we'll talk about that in a minute. But certainly bond yields rising is really a function of this. Well, is this the end of the kind of post-crisis policy era? So that's the era of incredibly loose and accommodative monetary policy, coupled with a tight fiscal policy, looking to cut deficits, reduce debt to GDP ratios. That's been the feature of the post-crisis era, and I don't know, I for one have been lecturing for at least 12 months that era needs to end because it's not working anymore. So here we've got this turn to Trumpism, whereby, you know, his policy outlook is very much about turning the ship around, and it's very much about fiscal stimulus. And this has led to bond yields rising as we price in perhaps the end of this post-crisis era from a policy point of view, and we start to price in some inflation. And so what's happened is inflationary expectations have risen, and the long end of the curve has gone up, and we've got yield curves steepening as a result of that, and a return perhaps to beginning in the direction towards a more normal sort of interest rate environment, right? So this is what's happening. I'd say the absolute standout asset reaction to Trump is bonds. And we've seen this across the world. It's not just here in the US, of course. Europe, yields climbing sharply, particularly in the periphery, and actually Italian bond yields jumped quite alarmingly on Friday. So we are definitely going to swing, not only continuing to think about Trump and all the very complicated angles and outcomes we might or might not get. We will be starting to look at the Italian referendum, of course, which is now just 3 weeks away. So I'll touch on that in a minute. But certainly today, check out your euro dollar. So what you're getting is dollar strength continuing after last week's moves. Euro dollar's just edging here, 107.67 on the futures. This puts us down at the lowest we've been since the first week of this year. So 11-month lows here for euro dollar. So these are the key themes. If you're looking at the pound, just again on a weekly chart, obviously you've seen a more complicated post-election reaction here, and actually where we trade right now, pretty much give or take 10 or 20 pips, where we trade right now on cable is actually where we were trading at the start of last week. So actually, from a cable perspective, it's been a much more complicated reaction, and that's because, of course, sterling had collapsed in the summer. There was no collapse in the euro in the summer, so that complication's not there, and you're definitely getting a very straightforward phase of dollar strength. And, we should expect that. Well, I don't know, technically, let's think about this technically. You've got this low first week of the year, so the 2016 low is at 107.28 for the futures, that is. So we're about 50 pips, not even, off that price point. You'd say technically that's certainly the next kind of barrier. We have taken out what was an important sort of low in March, and you might say not as good, but the sort of mid-January low at 107.89, these kind of levels have been breached, but definitely the better one is that 2016 low as it stands at 107.28. All right, so downside target. Obviously you can see that in November and into the start of December last year we actually got all the way down to just below the 105 handle. That was off the back of pricing in aggressive new stimulus from the ECB, and ultimately we didn't get that aggressiveness, and so the euro appreciated again. But 105 handle is obviously the big target on the downside. But certainly I think it's all about yields. It's all about a bit of dollar strength, and then of course from an equity point of view, going to the daily chart, just quite remarkable. I'm sure you've been, Ant's been talking about this throughout all of last week, so I won't go over ground already covered, but certainly today you might want to think about that high we had back in mid-September that we did get above briefly on Thursday last week, and it's just creating a bit of a barrier on the upside this morning. But look, what's happening this morning, we've generally speaking got a positive start with regards to equities. If I just bring the DAX chart into play here, let's go to a shorter time frame. These are Ant's levels. I'm just going to very quickly point out the obvious, which is that the high point we had on Thursday last week for the DAX, just short of the 10,800 handle, is today's high. So we have gapped open here. So what's driven this? Well, it's certainly developments from the US over the weekend, more news from Trump, and just this whole question mark: is he going to deliver on his aggressive anti-establishment promises from his campaign or not? And so certainly over the weekend we've seen what was probably the most likely direction, and that is for his aggressive, headline grabbing policy ideas of his campaign are already being watered down. So his key couple of things he said over the weekend was that, first of all, he's going to keep parts of the Affordable Care Act, or otherwise known as Obamacare. He's going to keep some of those, stuff like allowing people in their 20s to remain on their parents' medical insurance, stuff like that. In his campaign, he said we're going to repeal and get rid of the whole lot. So he's already watered down his rhetoric on healthcare. Also then, with regards to illegal immigrants, definitely backtracking a little bit on some of his aggressiveness in his campaign. So he said now that he will go ahead and deport or jail the perhaps up to as many as 3 million illegal immigrants that have criminal records. All right, so that's still very much his stance. However, there's about 8 to 9 million other illegal immigrants in the country, and to those, he's definitely stepped quite a long way back from his campaign talk, and he's actually described them as terrific people over the weekend, and that with regards to setting about getting rid of that lot, he said that's not an immediate concern. So quite a big step back on his kind of immigration idea. Paul Ryan's been involved and very much talking about, rather than concentrating efforts on legal immigrants inside the country, more about kind of protecting borders and I guess stopping the flow of new immigrants coming in. But that's a signal that Trump's presidency won't quite look like his campaign. Whether or not, hang on, I'll come back to the point I was going to make in a minute. The other kind of key development over the weekend is the appointment of his chief of staff, which is a guy called Priebus. Let me just transition my screenshot. This guy right here on the screen. Get used to the face. This is a guy called Priebus. He will be Trump's chief of staff. You could say this is the market-friendly appointment. This is the guy who's very much, he's chairman of the Republican National Committee. Huge experience in Washington. An ally of Paul Ryan. This is definitely seen as an appointment where Trump is... See, the thing is about a populist, anti-establishment person being elected, of course, by definition, they have no government experience. They wouldn't be anti-establishment if they had government experience. So the point and the problem Trump's going to have is, of course, fine, he's got the job now, but how the hell does he do the job? How does he work with Washington? How does he, all the technical side of being a president, creating new laws and what have you, he's got absolutely no idea, right? So he needs people who do. But of course, these people are establishment people. So all of those people that voted for Trump because he was anti-establishment are probably going to start to get a little bit frustrated by the watering down of his promises. Now, what happens from there, two things could happen. Trump could be just happy with the fact that, okay, his popularity is going to drop and just put up with it. But here comes the risk, because someone like Trump is almost certainly not going to like his popularity dropping, and here comes the policy risk, or the policy error risk. What does he do? What's the knee-jerk snap reaction to his popularity dropping? Does he then start gunning in with some of these aggressive, like anti-trade policies, for example, which could be very damaging? But anyway, Priebus being elected as chief of staff is a good thing. However, what he has done is kept this guy, Mr. Bannon, has what he's described as his chief strategist, and actually he announced Bannon first before announcing Priebus, which is a break from protocol, which does indicate that Bannon is going to be a significant part of his presidential team, if you like. Bannon is the opposite. He is the anti-establishment. He very much shaped a lot of Trump's campaign. Bannon's already invited Le Pen over. That's from France, from the National Front. He's very much the kind of aggressive sort of anti-establishment part. So Trump's been quite clever here, I think, in that he's trying to play both sides still. He's trying to play the side of the populist and the anti-establishment, but also he recognises he's got to actually run the White House, and that requires technical skill sets he doesn't have. It requires a connection with Washington and the ability to operate in Washington, and that's why Priebus has been announced. So, I think you've seen a positive reaction initially in markets this morning off the back of Priebus, off the back of Trump watering down some of those sort of aggressive policy promises that he was delivering in the campaign. So this is what's happening this morning. Just thinking, cable's still tracking new lows here. Eurodollar still tracking new lows. You're definitely still getting this dollar push. It's definitely a feature of the morning. Let me just go to a 60-minute chart here on my Eurodollar and just transition back to my charts. You're definitely getting this continued extension. So 107.60 now trading on the futures. So nice kind of steady clean breakout of that overnight low and a continued extension of last week's moves. So other stuff, let's look at before we come back and look at the charts, I want to just flick back and just think about this week. What happens this week now? What are we supposed to be focusing on? Well, first up, the economic data side of things here Starting today, of course, is pretty slow, it has to be said. Data-wise, today's a bit of a write-off. We've got some pretty important data tomorrow, actually, from the US. But obviously, I think all this economic data is still going to be pretty insignificant alongside the continued kind of developments we get in Washington over the course of this week. Continued kind of news flow out of Trump. Continue to try and gauge exactly how things are going to pan out. So data-wise today, pretty irrelevant. Looking at the calendar with regards to speakers, then actually we've got an extraordinary number of monetary policy speakers this week. Pretty much the entirety of the Fed are talking. The big event on that side will be Thursday when Yellen talks. Her first comments since the election. And that's the other thing about Trump. Is he going to start to try and shape a more hawkish Fed in the years to come? But Draghi's talking today at 3:45. All these Fed guys are after the European close. Okay, but I would say you're definitely still got. Well, yeah, I'm going to say it. I think we definitely still got a rate hike coming. I said before the election that if Trump wins, there's a 0% chance of a December hike. I have to say that's probably now wrong. I would suggest, I think there is most likely still going to be a Fed hike, given what's happened in financial markets, at least. The impossible has happened for now with regards to this risk-on kind of vibe that we've got going. And so therefore we are most likely going to see the Fed choose to take that opportunity, a real kind of bit of good fortune, if you like, in the near term with regards to the market's reaction. And right, let's get this rate hike done. Let's get it through the system. And so I do think that the post-Trump win, unusual contradictory market behavior will lead to the Fed hiking. So we should get commentary from the Fed this week, really kind of, I would suggest, cementing that in place. Okay. But from a data point of view, tomorrow's key. We got retail sales, we got University of Michigan, we got inflation data, we got GDP data this week. So certainly data is out there, but of course I think we definitely continue to see what happens in Washington continue to shape things. So let's just go back to that. Let's just have a think about equities. I'm just going to transition back to my charts. Let's just go back. I don't know. Let's see here. Let's look at the S&P. I think this is really tricky. I think you've got some real possible positives and some real possible negatives. You've got a real contradiction of policy ideas. So, for example, right, this rally we've had on equities, the S&P doesn't quite do this justice. The Dow Jones is the market that made new all-time highs. This is off the back of the idea that, finally we're going to get a turn in policy and we're going to get fiscal policy driving proper growth. This is fine, but ultimately, is that something that Trump's going to be able to get through Congress, even though Congress is Republican? The idea of fiscal spending is very much a Democratic kind of policy. So you might find that even though Trump is a Republican in theory, some of his policy ideas are Democratic, and he might struggle to get them through Congress. The definite thing that will pass through Congress will be tax cuts. So on the fiscal stimulus side, spending might be difficult to get through Congress. Tax cuts will not be difficult to get through Congress. This is definitely a Republican policy. So he's almost certainly going to get his income tax and corporation tax cuts through the system. The irony of all of that actually is the fact that really it's going to most likely benefit the rich the most. And the richer you are, the more it'll benefit you. Trump being a multi-billionaire, you might say, is really just delivering policy for his own agenda. So of course this will anger the kind of lower income portion of American citizens, or at least the white ones that kind of voted for him in the first place. So you're most likely going to get his tax cuts through. Will he be able to spend more as well? Perhaps, but then the problem with that is you're going to get deficits rising. If it doesn't quite deliver the huge growth stimulus Trump would want, you might get deficits rising. You're certainly going to get an inflation risk. Interest rates will rise. And we'll finally find out, I guess, just how much of the system is surviving only because borrowing costs are at zero. So we'll see. So there's real contradictory with regards to his fiscal plans. With regards to his trade plans, this is a much bigger risk, I think. But of course, this is an anti-Republican idea as well. So he's going to try and, he promised to deliver changes to trade agreements with pretty much everyone. A very protectionist outlook. That's not really Republican. And also, again, who's going to benefit from that, or who's going to be hurt the most, was probably middle to lower income America, because they're currently enjoying cheap or cheaper products as a result of these trade agreements allowing cheaper imports into the country. So if you start slapping big tariffs on Chinese imports, for example, well then middle to lower income America are going to be squeezed the most by that. So you've got a lot of contradiction in his policy. That's why it's almost impossible to judge what or will not happen. At the moment, markets have chosen to just go with one theme. That is, you're going to get fiscal policy coming through, and this is going to lead to an increase in inflation, and this is leading to bond yields rising. I think that's really the only main kind of theme you can take away from this, with some dollar appreciation as a result of that. Do equities stay positive? If I had £1 million cash and you were to ask me where would I invest it, I definitely wouldn't I would not invest it in the S&P 500. I just can't. I just don't believe that these evaluations, given the risks that are appetizing. So that's why I guess you've seen, whilst the remarkable rebound happened, it's not like the S&P's gunned up to new all-time highs, whilst bonds continue to drive clearly in one direction. Again, this week, here's the T-notes chart. This is a no-brainer. For equities, you've already seen some fatigue up here. I'm not saying we're going to get a sell-off, though. I think what might happen, and I'll just transition back to my other screenshot, because the other big risk, I would say, ahead of us is then what is the fallout in other elections ahead of us. Do we get Renzi losing his referendum start of December? Do we get, imagine, Marianne Le Pen becoming president of France? Does Merkel lose? Do Italy have does the referendum loss trigger a general election that sees the Five-Star Movement get into government, which sees a referendum and Italy leave? I think there's Trump's win just means that political shift away from the liberal left continues. So that's a massive risk. Whilst on the one hand you might say, fine, fiscal stimulus from America is fiscal stimulus for the world, and it's going to boost corporate profits and risk appetite and animal spirits. Yeah, fine. But other policies, other political factors might actually deliver negative outcomes that could override all of that. So ultimately, I think what we still have is huge uncertainty about what goes down here in the months and years ahead. And I think what it does is ensure volatility, not necessarily, this is now the beginning of a new equity bull market. I don't think that's right. I think there are too many risks. So anyway, that's enough of my kind of ramblings for now. We'll talk about the screenshot I've got later in the session. This is just thinking and turning our attention towards this referendum in Italy. Huge amount of very complex different outcomes that this diagram is trying to picture. So we'll go through this later, but I think you're certainly going to start to get a shift as we go through this week, and maybe perhaps next week we'll start to turn our attention more towards Italy. And bond yields rising in Italy last week was certainly a measure of that. Italian bond yields rose more sharply than all the rest, and so the Trump win makes it more likely that Renzi loses, which just slightly tweaks up that risk of, an anti-EU movement gathering momentum in Southern Europe. Okay, Euro-dollar just lifting a little bit back higher now. We didn't quite make it down to that January low I mentioned. We got to within 20, well not even actually, 13 pips of that. We're just getting a slight bounce now. But on the schedule for today, pretty much nothing of any interest, I'm afraid, from a scheduled economic data point of view. Industrial production is at 10, so that's less than an hour now, and Draghi talking at 3:45. Other than that, not too much on the slate, and it'll just be more about digesting the remarkable events of last week. All right, I'll be on the mic through the day. Enjoy the session. Thanks.